check out natural gas. If you haven't been paying attention, you should. It's been on fire the last month, climbing over 40%. And there are a couple of names in the space that may be fueled up and ready to break out. Let's go now off the charts with Chris Verrone. Chris, what stocks are you looking at with natural gas exposure?
Yeah, Brian, I think when you put this in context of the commodity here, this has been a big move, right? We've broken a multi-year downtrend. Sentiment's quietly starting to improve in the space. The technical picture's improving, 50-day about to break up through the 200. I think you have room on gas to about $3. So the question is, what names do we want to play? And, I think another benefit here for the whole space is that seasonality is really good. September and October is typically when you want to be buying gas. So we brought along a couple names here that I think are particularly actionable. Range Resources, RRC, is one example. This thing peaked 8 years ago. I think there's room to go here. 8 to 12 is the target or the move that we're looking for. What's remarkable about the stock is 26 analysts cover it. There's only 2 buys. So we don't have to worry about sentiment being too excessive here. I think it's an improving chart. And then secondly, when you look at EQT, another name in this space, in the E&P space, gas exposed, quietly starting to get a little bit better here. I would look through 16, get you to that 24, 25 range. So I think these rallies are in their nascent stages. I think the move in gas is just beginning. It's time to embrace it.
Yeah, we've seen. I'll chime in before we go to Jeff, just because I cover energy. We have seen the biggest drop in new drilling activity in America in history. Lost 900 drilling rigs in a year. Why do you care? Because natural gas is an offshoot of drilling for oil. So the less oil we drill, the less natural gas is there. Demand remains fairly strong. If it's cold, you got to turn on the heater. If it's hot, you want the AC to work. So Jeff Mills, what do you make of the natural gas space?
Yeah, totally agree on the price. I think you have upside there. The chart looks good. So if talk about the ultimate catch-up trade, you're looking at names that have been absolutely pummeled, and the technical picture is starting to look better. I've liked a company like EOG for a long time, just given their low cost structure and the environment that we're in. They source their own fracking material. They do their own prospecting. So from that standpoint, I really like a name like that. Their debt picture is better than peers. Their free cash flow yield is better than peers. So I think if you get a turning price, some of those names that are levered to that can do well. EOG is one that I like specifically.